Now let me share with you some key highlights of the key contracts and the execution for the current fiscal. Some of our key projects under execution include the Ghazipur order worth almost 378 crores from RVNL, which is running smoothly with a quarterly run rate of approximately 30 to 35 crores, and its closure is expected over the next 15 months. In addition, the Mathura Jhansi contract with RVNL, which saw an incremental order inflow in H1, is also running very smoothly. Both these contracts, once completed, will allow us to bid for single contracts up to 1,000 crores, underscoring our execution capabilities in the infrastructure segment. In the concrete super segment, the GMR order worth almost 250 crores continues to progress well, and cash flows from the same are expected to ease the working capital cycle further. We have calibrated our operations to ensure that any disruptions are not only temporary, but also will resume quickly, and as a result, we believe we are in a strong position. Lastly, we are pleased to report that our operating and liquidity position continues to improve. As we had mentioned earlier in our earlier calls, we have been optimizing our working capital in addition to clearing some long-term debt. On our old receivables, that's at rupees 20 crores approximately at the beginning of the year, we have managed a reduction of about 2 crores, and we expect to further reduce it by another 6 to 7 crores in the second half of the year. With that, the old receivable should come down to about 12 crores at the end of the fiscal. This has been made possible by improved cost management, reduction in old debtors, and a strong increase in overall operations, resulting in positive free cash flow generation. In addition, the various departments are processing outstanding refunds, and that will ease out the cash flow for the company. This is all from my side, and I would request the moderator now to open the floor for any question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit from Antique. Please go ahead.
Thank you. Thank you for this opportunity. Sir, my question is more to do with the railway policy as such. We have heard there are some changes planned, which would mean both private and public sector companies can participate on a same platform. Can you throw some color on this? Have you heard something on about?
So, the policy change that Railway is planning to announce or is already in the pipeline is that earlier the railway PSUs like RVN, IRCON and the likes would get the contracts on a nomination basis. They would not be subject to public tender. Now they are being leveled on the same platform. So the contracts that were given first to RVNL, IRCON, RITES and the other railway PSUs would now be on a public tender basis, wherein the private companies can also, like us, can also participate. I think this will increase the contract that we can, number of contracts that we can bid for, and it is better for the railways per se in reducing their costs.
Okay, but do you see revised tenders coming through?
Pardon?
A revision in the tender norms that you see through?
Railway has already got its own tendering policy in terms of e-tendering and all that, so there will not be any revision in the tendering norms per se. I don't anticipate that.
No, there is one more news that we have heard, which is about incorporating some non-financial parameters in bidding. This is something
that is for non-standard contracts. So what we bid for almost standard contracts. So those are mostly for non-standard contracts, but they are saying that up to 30% can be for non-financial criteria. So it need not be to L1 per se. It is 30% weightage would be given to non-financial softer criteria, I would say. So that I think that the policy or the draft of the policy only says it is for non-standard contracts. It is not for BOQ-based contracts that we are typically addressing.
Okay, great, great. My second question is more to do with your company itself. Could you talk about the order inflow part for the remaining part of the fiscal? Would you see any prospect orders? How big is that kitty looking like? What is that plan of conversion in the timelines ahead?
So we have got in this fiscal about 160 crores of new orders. We are at almost 3x of our FY21 revenues in terms of our net order book. At the end of the year, we aim to be almost at 3x of the FY22 revenues as well. So I think that our order book will grow to that extent, and we are participating in contracts almost on a weekly basis. So we have.
So if I understand it correctly, we have 3x book bill right now, which we will end up as 3x, which means we will roughly replace the execution of order inflow.
No, not only that, there will be some incremental as well, because this 3x is on FY21, and on FY22 the 3x will also incrementally add on.
Okay. And my second question is on the NHAI numbers that you had some reconciliation that was through. I mean, what is the progress over there? Is there any outstanding amount to that?
So NHAI, as we have also said in our earnings, the standard release, that the conciliation process is not gone through, so it is now back in Delhi High Court. So we expect that the process will go on slightly slower than we anticipated.
Okay. Just to summarize, if I have to understand, we do not face any working capital blockages, or we do not have any non-fund based limit thresholds. It is basically this COVID-led disruption that has impacted our execution as such, right? Largely.
Yeah. So I don't know what you mean by working capital blockages.
In case, because let's assume if there are, if you are confined your fund-based limits or non-fund-based limits, you may not be in a position to execute to a large extent. So I don't see that kind of issues surfacing up.
No, we don't have similar challenge compared to.
This means you stick to that 20% guidance, growth guidance over the next 2 to 3 years, which you have said in the last call as well.
Yeah, I think that we are on that path, because we are on the path of having a disciplined growth. We have a very disciplined strategy in terms of our margins as well. So if you see, our margins have always been preserved at 13 to 14% EBITDA level. And I think that going forward also we should be able to preserve our margin, reduce the debt, reduce some of these old debtors, and as well as increase the execution cycle as well, which will obviously have an impact on the cash flow as well.
Sure. Just to conclude, that margin threshold will be somewhere between 13 to 14, as against what you reported as 16 or 17% in the base year, or maybe even the last quarter.
Our annual, even last year, if you see, our annual margin is around the threshold that I'm talking about. So our annual margin last year, I mean, if you see the full year last year, was around that level.
Sure. I appreciate that part. All the best. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from DM Capital. Please go ahead. Mohit Kumar, your line is unmuted. Please
Hello?
go ahead with your question.
Sorry. Hi. Am I audible now?
Yeah.
Hello. Am I audible? Yes, sir. Good afternoon, sir, and congratulations on a decent set of numbers. So my first question is primarily on the order inflow outlook, especially for the railway segment and with the high-speed rail. I understand that you're participating in metro and high-speed rail. Is my understanding correct, first of all? And how big is the opportunity for you to bid for some portion of high-speed rail and metro? And also if you can comment on the order inflow outlook for the second half for railways.
Sure. So as I said in my previous reply, that Our order inflow for this financial year, we intend to close the year also at 3x of FY22 revenues. So our order inflow, which is about 160 crores already in the first half, we expect to have incremental order inflows to ensure that we are at 3x of FY22 revenues. And I think that we are on track to achieve the same. In terms of high speed and metro contracts, you're right that we are bidding for high speed contracts as well. And metro contracts, obviously, we are already executing. We have executed in the past as well. This is an area wherein the opportunities are increasing every month on month, year on year, and I think that it is a large market that is addressable, and we do bid for contracts, especially bridges and viaducts for these for this segment, and we will be able to address this market given our bidding capacity as well as our credentials from now bidding for up to 1,000 crore contracts.
And all the tenders in high-speed rail or metro, do you participate on your own or do you participate in a JV?
Metro is generally in our own name. High speed, we have participated earlier in a joint venture. Because high speed has certain other requirements wherein you need to have a joint venture partner.
Okay. And so, coming back to the first question on the order inflow outlook from the railway, have you seen the railways tending pipeline increasing for the second half, and why H1 was so muted for the entire industry?
I think H1 was muted because the first quarter was almost a washout due to the COVID, and secondly, I think that there has been right now and more of some changes in policy which the government was anticipating, like it was addressed in the previous question as well, and the government intends to implement those policies before they tender out these contracts. Since they are some of the policies they've already changed and they're in the process of changing further policies, I think they will start bidding out aggressively once these policies have been changed so that everyone is on the same line.
Okay. And lastly, on this, sir, on the revenue guidance, I'm attending your call for after a long time. Have you given any revenue guidance for FY22, and what is the expectation of growth for FY23 based on the current outlook?
So we expect
and something on the EBITDA margin. Are you seeing any pressure of input raw material inflation, which can reduce your EBITDA margin going forward?
So in terms of revenue guidance, we expect to grow almost 20% CAGR over the next 3 years. To give a guidance for FY22 is kind of difficult due to COVID, but having said that, COVID is slightly behind us, so I think that in the third quarter we will give a better guidance for FY22. In terms of margin pressures due to the increase in raw material prices, I think that as we have said earlier in our previous conversations as well, that all our contracts have price variation formula which is linked to steel prices, cement prices, etc. So we are adequately compensated in terms of the increase in the raw material prices, or rather even I would say even decrease. So I think our margins are in that way preserved. We bid for contracts in a very disciplined manner and expect our EBITDA margins to be 14% or north of that, slightly north of that.
So is this price variation clause applicable to high-speed rail and metro also? Or
Yes, it is applicable across. It is applicable for most of all our contracts, even the concrete sleeper contracts, even high-speed metro contracts as well, which we are executing.
Understood, sir. Thank you, sir. Best of luck. Thank you.
Thank you.
Thank you. A reminder to all participants, you may enter *1 to ask a question. The next question is from the line of Monica Arora from Share Giant Wealth. Please go ahead.
Thank you for the opportunity. Can you please throw some light on the subdued performance of on the consolidated basis?
Yeah, so like I've said in my opening remarks, our subsidiary in South Africa continues to experience some disruptions in terms of COVID-19 impact in South Africa, as well as some civil disruptions in South Africa, which have now subsided. We expect that the same will normalize by December, and the operations will pick up from January onwards. So that is the only reason why the operations on a consolidated basis were subdued. And it's because of fixed costs in the South African subsidiary, which did not attribute any revenue per se.
Okay. And if I could just ask a little bit further, like how much was the impact of input prices increase on EBITDA per se? And going ahead, will you be able to pass it on?
So the input prices do not have a large impact on the EBITDA because all our contracts, whether it is the concrete sleeper contracts or the infrastructure contracts, all have a price variation formula wherein the input prices in terms of cement, steel, etc. are linked to the various indices of steel, cement, labor, etc. And they do change our contract value whether on a positive or a negative side depending on the increase or the decrease in the prices. And this has been historically done over the last so many years, and I would say that going forward also it will be the same.
Oh, okay. And what kind of order book expectation you have for FY22 from the sleeper business?
From the sleeper business, I think that for FY22, we should see the inflow of an order in South Africa, and B, some incremental orders in India. So I think that we should see an incremental order inflow of almost 300 crores.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. A reminder to all participants, you may enter star 1 to ask a question. The next question is from the line of Alok Bajaj, an individual investor. Please go ahead.
Thank you very much for the opportunity. The question is simple, that there is some rumors that the parent company is under NCLT. Is it? Can you put the light on this thing?
No one is under NCLT.
Sorry, I could not hear you.
No, it's not.
Okay. Okay, that's all from us.
Thank you. The next question is from the line of Shruti Sharma, an individual investor. Please go ahead.
Hello. Thank you, sir, for taking my question. I have just one quick question. I just wanted to understand, like in APC business, are we, exploring, other segments to enter in? Because as we see in infra sector, all the sectors are segments are really performing very well, and there's a lot of opportunities. So, are we looking to enter into any other segment or planning to explore any such opportunity?
So, how the EPC segment does operate or industrial segment does operate is that you have to bid for contracts wherein you are having credentials. We do bid for contracts wherein we have had the necessary credentials. We have entered into various other segments like we discussed earlier about high speed and metro and others. So as and when our credentials are also building up, we are entering into other, whether it is A segments, B other geographies as well. And we are addressing the market as and when the opportunities do present to us.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. The next question from the line of Rikesh from Barclays. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Can you just highlight how much will be the revenue impact we had because of the South Africa operation being disrupted? Impact in the first half?
So last full year, the South African operations contributed of almost 40 crores. This first half, it has contributed only 4.5 crores.
So it could have been the region of around 15-16 crores, right?
Almost 20 odd crores, yeah, I would say.
20 odd crores. Okay. And now the operation stabilized or from December, as you indicated?
Well, like I said, from January, we expected to resume the normal operations.
Okay. And can you just throw more light on the order book side? Means how much order we are bidding? Because till now we have got around 180 order in the first half. So what kind of number of order we are bidding for and we are expecting to close it?
We expect to close the year at almost 2,000 crores of order book. And we, like I said, we are bidding for orders almost on a weekly basis. So I cannot give you the exact number and as in how many orders we are bidding, but that if you want to be, you can send us a separate question. We can always answer it offline.
Okay. And then just last query on this NHI. So how much amount receivable from NHI will be lying in the sundry debtors or something?
Almost 18 crores.
Okay, so almost 18 crores. And we, in our presentation, we have indicated around this 5-6 crores reduction in the debtor days. So are we building in anything from this NHI or it is from the others we are trying to looking to reduce?
So this does not reflect the receivable from NHI. This is other old debtors, this is ex NHI. This is without NHI.
Okay, that helps. Thank you.
Thank you.
Thank you. A reminder to all participants, you may enter *1 to ask a question. The next question from the line of Jitin Rushi from Axis Capital. Please go ahead.
Good morning, sir. So my question is on the competition. So we have seen high competitive intensity in the segment in which we bid for project size of around 200 crore or 300 crore or even lower. So sir, how do we see this competition or we face low competition as of now? Can you just throw some light on this, sir?
No, obviously you're right. Competition has intensified, which also reflects in the low order inflow for this financial year. However, I think that that's why we are addressing other geographies as well. Like I said earlier, we are addressing other segments as well. We are also, I think, that hopeful that this policy of having a low honest money deposit, which is up to 31st December, will not be extended, and the unhealthy competition which is right now there will subside post that.
Sir, as you said rightly, so how many bidders do we see? Do we see 10, 12 bidders, or it is
7 to 8 bidders typically.
So these are all unorganized players, or these are all organized players like GPT?
Most of them nowadays are unorganized because there's no honest money per se requirement. So that has led to this unhealthy competition. But I think that the policymakers are also realizing it, and I think that this policy hopefully should not be extended beyond December.
That should be good for the company, because otherwise execution again is a challenge if even you get awarded the project.
Yeah, because I think the unorganized players will not be able to execute. I should not say they will not be able to execute. I think
I understand that, sir. So, but you have seen in last 1 year probably, we saw COVID last year first half, post which we saw ordering picking up. So have you seen any loss in the order wins because of unorganized players coming in and high competition, where we have a benchmark in margin, and do we see
discipline in our order inflow and our bidding? So we don't anticipate any losses in terms of the orders that we have bagged.
Got it. So now I think, sir, Q4 onwards we can expect strong order inflows, as you have said, we are guiding more than 2,000 crores this year. Sir, can you just throw some light in terms of next year and in 23 and 24, like what kind of top line we are targeting? I would not.
As I said that we expect to grow almost 20% CAGR. So that would anticipate our growth in the top line. However, like I said, this obviously has to be in sync with the order inflow as well. And we expect that, like I said, in terms of the competition, once it subsides, as the competition does subside, the order inflows will also grow.
Sir, going forward, do we expect our receivables should be smooth, like what we have seen in the past has got stuck? I think the working capital requirement and other things should be normalized.
The working capital cycle is quite better compared to what it was, say, even 2 years ago. Even this first half, if you see, our cash flow from operations was quite healthy. And I think that that does speak on our operations as well.
Sir, any CapEx required for this growth of 30% CAGR? Like,
First of all, I did not say 30%, I said 20%. And CapEx is obviously there will be some CapEx required, which is factored into our projections as well, our business plan as well.
Fine, sir. That's it from my side. Thank you, and sir, all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. As there are no further questions, I now hand the conference over to Mr. Atul Tantia, Executive Director and CFO, for closing comments.
Thank you everyone for your participation in today's Q2FY22 earnings conference call. In case you have any further queries, you may get in touch with us or with our IR team, Stellar Investor Relations. I wish that you all take care of yourself and your families and stay safe. Thank you and have a good day.
Thank you. On behalf of GPT Infraprojects, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.